Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video we're going to talk about the importance of using multiple technical indicators. Now, as you guys know, I'm a big fan of having a lot of signals that agree with each other. So having RSI and MACD and stochastics all pretty much agree with each other as far as where the market's going. I'm not a fan of using just one technical indicator and saying that that's the holy grail, because they're not. A lot of indicators are flawed and they're subject to your own interpretation. So when you use multiple technical indicators, you get a much better sense of where the broad market is going. So again, there's no perfect indicators, no such thing as a perfect indicator. You have to learn to use multiple indicators in conjunction with one another to get valid signals. Not saying that they're going to overlap perfectly, but when used properly, multiple indicators will start to confirm and support one another, and make you more confident in placing a trade or adjusting an option. So as I was talking about, one indicator just isn't enough. If we take a look at this particular stock, and I don't even know what the indicator is, or stock is, I just took it off, but you can see that it's been moving in these erratic movements, pretty volatile stock, trading between 350 and 430. Now you can see I have an RSI that's overlaid on here, and we've gotten some very good signals. But these are just one signal, it's just one indicator. Could it have made you money? Absolutely, but it's much better to see it if you can overlay a bunch of other different signals as well. So now we have two indicators on here. This is an RSI and a stochastics, and you can see that using both indicators that we have overlapping signals, more or less. And what's really important is down here. This is where I think the importance of using multiple indicators comes into play. If you have, for example, this RSI, which gives a green arrow, which is really your buy signal, that actually gave a buy signal fairly early, and you actually saw some more decay in the stock after that. If you were using multiple indicators, you could see that the stochastics was nowhere near giving a buy signal at the time, and actually gave a buy signal a little bit later. So if anything, if you got in on the first RSI signal, you could use the second stochastic signal down here in the beginning part of December as a confirmation of your trend. The same thing could be said about these two areas here in blue, that the stochastics just confirmed what the RSI signal had already shown. But again, it's a really great way to trade, is using multiple different multiple indicators. I'm not a fan of over analysis paralysis, having 72 indicators, because then you start looking at too many things all too often. But I do like having a couple indicators on the chart at one time. So again, using too many indicators is going to be very, very tough, and it's going to leave you with a lot of different choices, right? Everything should be used in moderation, and this includes technical indicators. This is what I was just talking about, suffering this analysis paralysis. You look at so many indicators that you actually become blinded to what's actually happening, and you miss a lot of the trades. So all those indicators can give you a bunch of different signals and again lead to confusion. Instead, focus on very good indicators and learn to master those first. Again, remember that clear signals are priceless. Use 4 or 5 different indicators and use those all the time for a couple months. See how it goes and then adjust your trading strategy later on. So as always, thanks again for watching, and take a second to share this video right below on any of your favorite social networks with your friends, family, or colleagues.